Tesla is in recent concerns as although Goldman Sachs has raised its price target for Tesla stock, reflecting investor confidence, the renowned financial institution also simultaneously downgraded its rating on Tesla. Meanwhile, in Shanghai, recent drone restrictions implemented near the Gigafactory have sparked speculation about Highland testing for the Tesla Model 3. But that's not all. General Motors has made a significant investment in the production of manganese sulfate, a vital component for EV batteries. Will Tesla's rising stock price overcome Goldman Sachs' lower rating? Also, what could the Shanghai drone restrictions mean for Tesla's Model 3? And how will GM's investment in manganese sulfate production shape the future of EV batteries? Let's dive in this video to unravel the answers. Goldman Sachs, a prominent investment bank, has made a curious move by downgrading Tesla's stock from a buy to a neutral rating. Despite this downgrade, the firm has actually raised its price target on the electric vehicle maker from $185 to $248 per share. This decision comes among Tesla's impressive rally, with its shares rising by a remarkable 108% year-to-date. Even though Tesla's stock experienced a slight pullback recently, closing at $256.60 per share, it still boasts an impressive market capitalization of $813 billion as of the past week. This remarkable valuation indicates that the company has a strong chance of reaching and potentially surpassing the $1 trillion market cap milestone in the near future. However, in pre-market trading, Tesla shares were marked 1.9% lower, suggesting an opening bell price of $251.73 each. Goldman Sachs analysts still maintain their optimism about Tesla's long-term growth potential. Even so, they believe that with the significant rise in Tesla shares, the stock now more accurately reflects their bullish stance on the company. The analyst highlighted this viewpoint in a note to clients, stating, "Overall, we believe our view that Tesla is well positioned for long-term growth is now better reflected in the stock." The decision to downgrade Tesla shares to a neutral rating appears to be primarily driven by the company's valuation itself. The analysts expressed concerns about a challenging pricing environment for new vehicles, which could pose difficulties for Tesla's non-GAAP AAP gross margin in 2023. Mark Delaney, a Goldman analyst, noted, "While the market is now giving the stock more credit for its longer-term opportunities, we are also cognizant of the difficult pricing environment for new vehicles that we think will continue to weigh on Tesla's automotive non-GAAP gross margin this year." However, it is important to note that the analysts remain positive on the adoption of electric vehicles and see potential investing opportunities among a broader set of suppliers, particularly those with higher content to support the shift to EVs and electrification. Goldman Sachs is not the only firm that has adjusted its forecast for Tesla. Other financial institutions such as Morgan Stanley and Barclays have also downgraded the shares of the electric vehicle maker to an equal weight rating in the previous week. This recent downgrade by Goldman Sachs and other firms raises question about the future trajectory of Tesla's stock. What impact will these downgrades have on investor sentiment towards the EV giant? Only the time will tell. Up next, Tesla Giga Shanghai drone restrictions brings Model 3 Highland testing speculations. Tesla China has taken measures to ensure that its activities at Gigafactory Shanghai remain hidden from prying eyes, according to reports. The company has reportedly implemented systems to interfere with the signal of drones flying over the complex, limiting their flight height to a mere 30 meters and causing signal interference. This move has left observers curious about what Tesla is trying to conceal within its factory premises. Among those closely monitoring the progress of Giga Shanghai is Wu Hua, a YouTuber who has been observing the factory's build-out for 5 years. In a recently posted video, Wu Hua revealed the implementation of aerial controls in the Giga Shanghai area. These measures, however, can only be put in place with the approval of the local Chinese government and the cooperation of drone manufacturers like DJI. This suggests that Tesla's activities are being tightly guarded, and the restrictions may remain until they are lifted. Some believe that the company may be testing the Model 3 Project Highland, while others suggest that it could be related to the rumored $25,000 mass-market electric vehicle. The level of secrecy surrounding the facility has led to speculation that an even more significant vehicle could be undergoing testing, potentially the affordable Tesla designed specifically for the Chinese market. Drone restrictions are not new to Tesla's gigafactories. In the past, similar measures have been implemented at Giga Berlin, where a drone flying at an unusually high altitude caused a passenger aircraft to reroute. This incident prompted an official investigation. Earlier this year, Tesla also banned drones from overhead flyovers at Giga Berlin for undisclosed reasons, allowing pilots to operate them only from a distance. It is possible that Tesla is aiming to avoid unsafe aerial interferences at Giga Shanghai. Last month, the facelifted Model 3 was seen testing in California. It appeared to have redesigned headlamps, tail lamps, and rear diffuser. The test mule also seemed to have updated cameras for the Hardware 4 autopilot computer. Moreover, the camouflage prototype had a vertical turn signal, as opposed to the horizontal LED indicators on the current cars. The restrictions that have been placed on Giga Shanghai suggest that Tesla China is conducting activities within its factory premises that it does not want to share just yet. With this in mind, speculations are high that the Project Highland model, the 3rd of May, be getting tested around the factory. Some EV enthusiasts, however, have noted that the level of secrecy around the facility suggests that the EV maker may be testing an even more important vehicle, perhaps the affordable Tesla that was reportedly designed in China. Up next, GM invests in manganese sulfate production plant for EV batteries. General Motors has set its position in the electric vehicle market by signing a supply agreement with Element 25 Limited, a company specializing in battery-grade manganese sulfate, a crucial component of lithium-ion battery cathodes. To further support E25's operations, GM has provided an $85 million loan to facilitate the construction of a manganese sulfate production plant. This collaboration places GM in an advantageous position to qualify for EV incentives under the Inflation Reduction Act, while strengthening its commitment to scaling EV production in North America. The agreement between GM and E25 needs an annual supply of 32,500 metric tons of manganese sulfate, ensuring the production of over 1 million electric vehicles each year in North America. Doug Parks, GM's Executive Vice President of Global Product Development, Purchasing and Supply Chain, highlights the significance of the collaboration. Our direct investments in battery raw materials, processing, and components for EVs are providing certainty of supply, favorable commercial terms, and thousands of new jobs, especially in the US, Canada, and free trade agreement countries like Australia. The $85 million loan from GM will contribute to the construction of E25's facility in Louisiana, which is set to start operations in 2025. This plant will be the first in the United States to produce battery-grade manganese sulfate, a critical component that improves the cost efficiency of EV battery cells. The facility will process manganese concentrate sourced from Australia, a key player in the global supply chain for battery mineral. E25 plans to invest approximately $290 million in the Louisiana facility, and preparations for the 230,000 square foot plant are scheduled to begin in the third quarter of this year. The operation is expected to create up to 200 permanent jobs, contributing to the growth of the local economy and promoting job opportunities in the EV industry. In addition to its collaboration with GM, Element 25 has also secured a 5-year supply agreement with Stellantis for high-purity manganese sulfate monohydrate. Under this agreement, E25 will supply 45 kilotons of manganese sulfate monohydrate to Stellantis starting in 2026, with options to extend the supply term and volume. This further demonstrates the company's commitment to becoming a leading source of high-quality battery materials for the global EV industry. The partnership between GM and E25 symbolizes the importance of secure and reliable supply chains in the EV industry. By investing in domestic battery material production and establishing strong collaborations, automakers like GM are strengthening their position in the rapidly evolving electric mobility landscape. Up next, Volvo adopts Tesla's NACS connector for EVs. Volvo, a leading automaker in the electric vehicle industry, has recently announced its decision to adopt Tesla's North American charging standard for its electric vehicles. By choosing to use Tesla's charging connector, Volvo joins a growing list of major car manufacturers that have embraced this standard. This move is expected to facilitate charging accessibility for Volvo EV drivers and streamline their experience across North America. In addition to adopting NACs, Volvo's partnership with Tesla also grants the Swedish automaker access to Tesla's extensive supercharger network, which comprises approximately 12,000 charging stations across the region. This access aligns Volvo with other industry giants like Ford, General Motors, and Rivian, who have all benefited from partnerships with Tesla in terms of supercharger access. Volvo CEO Jim Rowan expressed the company's commitment to making the transition to electric mobility as seamless as possible, stating, "As part of our journey to becoming fully electric by 2030, we want to make life with an electric car as easy as possible." Notably, Volvo expects the number of supercharger locations available to its customers to increase further as Tesla continues to expand its supercharger network across the region. This expansion will provide Volvo drivers with even more convenient charging options, further enhancing the appeal and practicality of owning an electric vehicle. To ensure compatibility and convenience for current EV owners who may be using the combined charging system of chargers, Volvo will also offer an adapter. This adapter will enable existing EV owners to seamlessly transition to using the NACS connector for charging their vehicles. The adoption of Tesla's NACS connector by Volvo follows a trend among various automakers recognizing the benefits and practicality of the standard. Tesla's decision to open up NACS to other companies in late 2022 has encouraged widespread support for this technology. The Society of Automotive Engineers recently announced its plans to make the Tesla NACS connector a standard and expedite the process of implementation, while Volvo and several other major automakers have embraced Tesla's charging connector. Some companies remain uncertain about adopting the technology. Stellantis, the parent company of renowned brands like Chrysler, Alfa Romeo, and Fiat, has stated that it is currently evaluating NACS. Similarly, Hyundai is also considering the adoption of Tesla's charging standard. However, switching to NACS may pose certain challenges for companies with different charging architectures. For instance, Hyundai and Porsche have 800-volt architectures that enable faster charging than the existing superchargers. They would need to negotiate with Tesla for upgraded technology or accept slightly slower charging rates. Up next, GM's Chevrolet Silverado EV will not be Tesla compatible for now. General Motors has confirmed that the Chevrolet Silverado EV, the highly anticipated all-electric pickup truck, will not be compatible with Tesla's charging infrastructure until the model year 2025. This news has sparked discussions and raised concerns about compatibility issues within the electric vehicle market. The decision by GM stems from the fact that the Silverado EV, specifically the 2024 model, was likely designed before the automaker's adoption of Tesla's North American charging standard. As a result, the vehicle's parts and assembly line might not have been optimized to accommodate Tesla's charging port yet. To provide a glimpse of what to expect, the Twitter account What's Inside shared a sneak peek at the Silverado EV's charging setup. The all-electric pickup features a larger charge port door compared to other electric trucks like the Tesla Cybertruck. It is equipped with a CCS charger, which means an adapter will be required to charge the Silverado EV at Tesla supercharger stations. Despite this temporary incompatibility, GM has announced that deliveries of the Chevrolet Silverado EV will start in the coming weeks. GM's decision not to include Tesla-compatible charging ports in the Silverado EV until 2025 aligns with the automaker's recent adoption of Tesla's NACS. However, the current battery-powered pickups from GM are not yet fully compatible with Tesla's supercharger network. This compatibility delay may impact customers who rely on Tesla's expansive charging infrastructure and potentially influence their decision when considering an electric pickup truck. Up next, Tesla abandoned Spain Gigafactory as EV maker grew furious with leak. In a surprising turn of events, Tesla has reportedly abandoned its plans to construct a Gigafactory in Valencia, Spain. This decision came after the plans and negotiations were leaked in a report earlier this month, leaving the electric vehicle manufacturer frustrated and disappointed. Earlier in June, reports emerged stating that Tesla was engaged in very advanced negotiations with the Spanish government to establish an automotive production facility in the city of Valencia. The discussions were based on Spain's Cinco Dias report, which highlighted Tesla's potential €4.5 billion investment in the region. Tesla was one of several multinational companies in dialogue with the Valencian government regarding their investment plans. Unfortunately, negotiations fell apart after the leaked report surfaced, prompting Tesla to withdraw from further discussions with Spain. The leak not only angered Tesla, but also eliminated the country's chances of becoming the home for the automaker's next major production facility. Ximo Puig, the president of the state, denied any involvement in the leak and stated that a member of the government had leaked the confidential information. While the leak remains a subject of internal political struggle, its consequences have damaged Puig's reputation. Regardless of the source, the leak resulted in media attention and forced Tesla to rethink its plans in Spain. With Spain out of the running, India appears to be the frontrunner to host Tesla's next production factory. However, other countries such as Canada, South Korea, Indonesia, and France have also emerged as potential suitors. Tesla is actively seeking a suitable location and plans to announce the chosen site by the end of 2023. Spain's neighboring country, France, has become a leading contender after a meeting between Tesla's CEO, Elon Musk, and French President Emmanuel Macron. Italy's Prime Minister, Giorgia Meloni, also met with Musk, indicating that Italy is in the race as well. Additionally, Canada and India are reportedly under consideration for Tesla's future manufacturing plant. Although the deal with Valencia fell through, it is important to note that Spain remains an attractive location for automakers. Volkswagen, for instance, has plans to establish a battery plant in the country, emphasizing the growing interest in Spain's automotive sector. While the specifics behind Tesla's decision to abandon its Valencia plans are not fully disclosed, the leaked report and subsequent media attention played a significant role. Tesla's frustration and disappointment with the situation led them to reconsider their options. As the search for a suitable location continues, the world eagerly awaits Tesla's announcement later this year. Up next, Tesla Full Self-Driving to lose beta designation with V12 update. Tesla's full self-driving suite is undergoing some significant changes as the company prepares to retire the beta designation from its software. In a recent comment, CEO Elon Musk revealed that FSD version 12 will no longer be considered beta upon its release, signaling a potential milestone for Tesla's advanced driver assist system. The announcement came in response to a tweet from a longtime FSD beta user who humorously suggested that FSD beta 12 might arrive maybe later this year. Musk's simple reply, "Version 12 won't be beta," ignited speculation about the upcoming changes and enhancements. The FSD beta program, which began in October 2020, has seen multiple iterations and refinements since its inception. With the rollout of FSD beta version 11, Tesla integrated a single software stack for both inner-city and highway driving, introducing several updates to enhance the system's capabilities. However, it's essential to approach these developments with some caution. Musk's statement may indicate Tesla's intention to drop the beta label from the advanced driver assist system, aligning it with the company's existing autopilot feature. While autopilot is still considered to be in beta, it has undergone significant refinement and is widely regarded as a leading driver assist system in the market. However, if Tesla does remove the beta designation from FSD, it would be a substantial display of confidence in the system's capabilities. Tesla has dedicated extensive efforts to perfecting its full self-driving suite, with the upcoming production start of the Dojo supercomputer scheduled for July. These advancements suggest that future improvements to the system could be notable and significant. It is important to note that the release date for FSD version the 12th of May still be some time away. Tesla could potentially release additional iterations of FSD beta version 11 before reaching a point where it deems the software safe and proficient enough to shed the beta moniker. Elon Musk's comments have sparked excitement among Tesla enthusiasts, but it's also reasonable that his statement primarily refers to Tesla's decision to drop the beta designation for the FSD kit itself. Tesla's ongoing efforts to refine and enhance the FSD beta, coupled with the imminent production start of the Dojo supercomputer, suggest that the system's capabilities will continue to evolve in the near future. Up next, ChargePoint is first out of the gate with new NACS EV charger options. ChargePoint, one of the prominent players in the electric vehicle charging industry, has announced its readiness to deliver NACS chargers, marking a significant step towards embracing the Tesla NACS standard. As Ford and General Motors throw their support behind the NACS connector, ChargePoint aims to be at the forefront of this transition, with its units already primed for deployment. In a recent Facebook post, ChargePoint hinted at its preparations for the NACS move, and now it has formally revealed its NACS-enabled solutions, available for new orders and existing customers of CP6000, CPE250, and Express Plus chargers. By integrating NACS connectors alongside their legacy J1772 or combined charging system counterparts, ChargePoint ensures seamless compatibility in the rapidly evolving EV charging landscape. Bill Lowenthal, Chief Product Officer at ChargePoint, expressed confidence in the company's ability to adapt to changing market dynamics and cater to customer needs. He emphasized the modular nature of ChargePoint's charging platforms, combined with the new NACS connector options, as the key to successful EV charging across various scenarios. Lowenthal reaffirmed ChargePoint's commitment to developing network charging solutions that enable any EV to charge in any parking space. Notably, ChargePoint's DC fast charging units will also comply with the NACS standard. Models such as Express 250, Express Plus, CPF 50, and the award-winning Home Flex will either be sold with NACS connector options or offer the flexibility to be reconfigured accordingly in the coming months. Commercial and light fleet customers will also benefit from NACS compatibility, as the CP6000 charger can be purchased or retrofitted with NACS connectors starting in early 2024. ChargePoint's anticipation of the connector standards change is evident in its design approach. The company ensured cable modularity in its charging units, enabling site hosts to replace, repair, or exchange charging cables and connectors, including NACS connectors as needed. Other notable EV charging companies like Lectron and Emporia are also working diligently to swiftly adapt their charging solutions to meet the upcoming NACS wave. The Tesla NACS connector has gained recognition as the superior choice for EV charging applications, and the seamless adoption of this standard by leading EV charger manufacturers is commendable. With ChargePoint leading the charge by delivering NACS-enabled solutions, the industry is poised to embrace this better mousetrap of a connector. That was all the Tesla and EV news for today. What do you think about Giga Shanghai drone restrictions and GM's investment in manganese sulfate? Share your views in the comment section below. And if you want to see more interesting videos, don't forget to subscribe with all notifications enabled so you don't miss out on the latest news on Tesla.